Good day, everyone. Thank you for joining us today on Coffee Talk, your coffee cup size session on what is going on in the world of investment and current affairs. And let me introduce you our team. Jason,
Hello, hi.
he will keep us up to date with what is happening here in Singapore. And taking a macro look at things, we've got Alistair,
Hi.
who's covering the global desk. As for myself, I'm Benjamin, and I'll be talking to you guys all things USA. So let's get started, shall we? First up, the place we call home, Singapore. What is happening on our shores, Jason?
Okay, I guess one of the the hotter news nowadays, right, would be what is relevant for you and me is the banks are now actually cutting their interest rates, all right, on savings accounts during this COVID-19 outbreak. So for me personally, I started off with a POSB account like most Singaporeans. How about you guys, Ben, Lester?
I think I'm very similar to you. I've got a POSB account, started when I was very young. But recently, me and my wife, we've got a OCBC 360 account, a joint account actually. Yeah.
So I have a POSB account that I started from like too young already. That one cannot remember when, but but that's all I have. I'm not working with any other banks. Yeah.
Yes, I think the memory of the little blue POSB book is something that most of us will remember from young. So, but Benjamin, what you mentioned about OCBC 360 is very interesting because this is what we call a step-up account. Okay, this has been very popular over the last few years. Okay, because in order to enjoy, instead of the standard 0.5% of an interest rate on your savings account, you can now get potentially almost 3%. All right. But that is provided you do a few things with the bank. For example, you credit your salary, you do a gyro transaction, as well as like you have to buy a financial product to enjoy the full benefit. Okay. So however, a little bit of bad news is as of 1st of June, which is just this week, okay, OCBC announced that they are actually taking away the spending interest. All right. So that means that you have been spending on their credit card, right? Likely that you will not see the kind of 3% anymore. And if you have about 75,000 that you keep with the bank from 3%, you kind of see go down to 1.2%. Or if you have even lesser than 35,000, you see that your interest is now 0.6%. Okay.
So is that time to, in that sense, is it time for me to change bank?
Definitely not, because I think it is still useful and important for you to keep your banking relationship. All right. Then I would say that there are some options available. Some of my friends and clients actually ask me like, is there any flexible and yet liquid place that they can actually earn better interest? There are options, and the answer is yes. So if there is something that can get you a 1.8% return, okay, and there is zero lock-in, is that something that sounds useful for you?
Yeah, as long as I guess the no lock-in helps me in that sense where it's like a bank account, I have that liquidity, I think that's fine.
Okay, then that's wonderful. So our dear viewers, if you're interested to find out more about this, you can just indicate your particulars inside the Google spreadsheet and we will send you some information. Okay. So amidst this actually lowering of the interest rate, right, there is still a little bit of a silver lining, okay, especially if you do have a property mortgage loan. Okay, so personally for me, my loan interest was around 2.1%. However, because I refinanced it just around 2 or 3 weeks ago, okay, now it's now 1.2%. Wow. So you see that I kind of save quite substantially on interest. And if you do have a mortgage loan or you know of somebody who have a property, feel free to connect them with us. We'll send them our mortgage broker's information, and then they can help them come up with a solution that better fits their needs. So this is all for me on the Singapore side. Over to you, Ben.
All right, thank you so much, Jason. So I don't know how many of you guys, for me personally, I am quite sian with this lockdown, or in Singapore we call it circuit breaker, right? That we're not able to take a flight out. But today we can take a virtual flight to the US, and let's see how the S&P 500 is doing for us. So as you can see, it's a sea of green, and I think it's very logical, right, to expect that with mostly bad news that the US is facing, it's really, why is it that the market is not reacting accordingly? I think a good quote that I've heard recently, and I'd like to share with you guys, is that the market always seems very heartless. There's always no emotions, there's no care, doesn't have empathy. But actually, that is the nature of the market. And I'm sure some of us have heard this good news of a potential vaccine for COVID-19. And this is one of the factors that has set the market surging in recent times. I sure am ready to go out to meet my family and my friends once this vaccine has been found. But unfortunately, there are also things that has dampened the market in the sense where there were awful developments on employment, retail sales, and corporate earnings, and of course, the recent protests and riots. And so this global pandemic, racial striving, political upheaval, and a rising stock market amid all this chaos. I think it sounds so much like our year this year, but do you guys know that actually echoes all the way back to 1968?
Yeah, so Ben, with the market climbing so fast and like still going up, right? Do you think you will still continue for the rest of the year?
I really do hope so. So what some of us investors like to do is we like to see what has happened in the past, and then we use it as a comparison to look at what is potentially going to happen for us this year. So I'll answer your question later on, Lester. Maybe what we'll do right now is we'll go through the events that happened on that year, and then at the end of my session, I will address what actually happens to the market for that year.
Okay.
So one of the most talked about events for us this year, anybody want to guess?
Stay at home, quarantine, COVID-19.
Yeah, so I think that's the key for a lot of us, and COVID-19 is something that has been on the mouth of every single, at least the people that I speak to. And back in 1968, they've also had the H3N2, which was also known as the Hong Kong flu pandemic. And that particular pandemic actually killed nearly 100,000 Americans and millions globally. Recently, we had that protests and riots because of the unfortunate death of George Floyd. And that particular thing was also mirrored in 1968 when Reverend Martin Luther King was assassinated, and they saw a dozen cities rioting across America. In November, America is actually going to the polls. And once again, back in 1968, they did. And Richard Nixon eventually won the White House. And I'm sure some of us would argue and say that was actually made a bit easier because of another assassination that happened during that year, which was Robert F. Kennedy, who was Richard Nixon's strongest competitor. And just this past weekend, I personally stayed up together with my wife. We witnessed Dragon and SpaceX successfully for the first time sending 2 astronauts to the International Space Station. In 1968, again, it ended with 3 astronauts orbiting the moon for the very first time. After they circled it 10 times, one of the astronauts on board famously announced, "Houston, please be informed, there is a Santa Claus." And I think to answer your question, Lester, Christmas actually came for America that year with a 7.6% price gain. Although the first quarter, it dropped 9%. And so far in 2020, our index is still down about 5.7%. But a recent 36% rally from the March low has actually investors thinking, are we going to defy headlines again? And I think to sum it all up, the point I'd like to bring across to you guys is we should not be panic buying or panic selling in that sense. We should have a long-term perspective. And of course, if you're confident in the businesses that you've already invested in, the stocks that you've already placed your money in, it's to have faith in those companies and to know that they will tide through, just like what they did in 1968. I think very much like today, it's about keeping hope and bringing positivity to know that like things will get better. So I'll hand this time over to Lester.
Okay, so it's interesting that there are so many similarities from the past to today. So hopefully we do end off in the green by the end of the year. Yeah, so I would like to share regarding the opening of economies globally. So for us in Singapore, we have our circuit breaker measures starting to lift off. People are starting to go back to work. Students are going back to school. So I found an article from venture capitalists. They look at the behavior of the economies. They look at where each country is at in terms of the pandemic. So there's 2 things that they look at. They look at mobility and they look at recovery. So where there is high mobility and high recovery, we can also assume that there is high economic activity. And of course, the other side is also true. If there's low recovery, low mobility, then there's also low economic activity. Yeah.
Okay. So, Lester, so what are the countries that are experiencing more mobility? So, are you saying that we should put more investment into those countries?
I would say there is a good opportunity there in countries which have high mobility and high recovery. I myself, I'm looking at those areas also, and I am partially invested in those areas. And what actually those things mean is like, I mean, you want to invest in countries that have growth, and only with economic activity then you will see growth. So high mobility means people are actually going back to work.
Like Singapore, for example.
Like for Singapore. So I can give you an example. Like, say Europe already opened up in mid-May, and there's already news of like traffic jam, for example. So that shows you economic activity. Yeah. Countries that are of high mobility and high recovery are countries that already have economic activity and really starting to see growth already. So those countries are like Taiwan, like New Zealand, like China. Then countries with low mobility and low recovery that I will try and like steer clear a little bit off would be like UK or France. These are countries that I would try and maybe step away from it a little bit at this point of time. Yeah. And then there's also another thing that the article mentioned that I think is quite critical is instead of just listening or seeing on newspaper or what are they going to do, I think it's more important to look at what they are actually doing. So take for example China. There was a report that said that there might be a second wave. So they took action and immediately they tested 10 million people in 19 days.
Wow, that's more than the population of Singapore.
Yeah, so actually it's quite amazing if you think about it. Then that tells you that actually the country is ready and it doesn't really impact the economic activity. So which is why I'm looking at that country. And then you have all the way at the other spectrum, which is like Sweden. Yeah, so Sweden didn't do a lockdown. They decided to do this thing called the herd immunity. However, it seems to be failing because there's low recovery. That means people are actually dying from it. And there's not much that they can do because the infection and the hospitals are not ready because there's no lockdown, there's no protection. But then the funny thing is, although the government didn't tell them to lock down, didn't tell people to, okay, you must stay home. People already start staying at home on their own. So that lowers economic activity. Yeah, so these are the places that I would steer clear. Yeah, that's all from me.
Okay, all right. Thank you, Lester. So what we have here is this rounds up a coffee cup size of news from Singapore to US and also to global. And if you find the information useful today, feel free to share with your friends if they are looking to get a little bit more interest, like for example, the 1.8% guaranteed interest, or also to refinance their mortgage loans. Or if you're looking for more information on whether are we as US a good place to invest in, or which other global economies are maybe a good place to place your money, all right, just drop your particulars in the Google spreadsheet and we'll follow up with some information. Thank you so much.
Thank you so much.